Welcome to the Crypto Pulp University, where we help you learn about all things cryptocurrency. Today's topic is Fibonacci, what it is and how it can be applied to your cryptocurrency activities, i.e., trading. What is Fibonacci? Fibonacci is at its most fundamental, a sequence of numbers that are found everywhere in nature. Yes, that's correct. There is a mathematical sequence that naturally occurs in many things in nature. The Fibonacci sequence was first described in Indian mathematics in 200 BC. Leonardo of Pisa, also known as Fibonacci, introduced Western European countries to the sequence in the 13th century. That sequence is 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, and so on. The Fibonacci sequence appears in plants, animal shells, pine cones, hurricanes. This Fibonacci sequence shows up in plants when you count the number of petals, or in pine cones when you count the number of seeds. The Fibonacci sequence has also been used to describe shapes, known as a logarithmic spiral, found in, for example, the Nautilus shell. But these spiral shapes are also found in spiral galaxies. These spiral shapes are created using the Fibonacci sequence by drawing a series of squares, making sure the square sides are pertaining to numbers from the Fibonacci sequence, for example, 1, 1, 2, 3, 5, 8, and 13. Then drawing curves through each of the squares, starting at 1 through to 13. The spiral shape that emerges is a geometric representation of the golden ratio, 1.618, otherwise known as phi. So, importantly, in Fibonacci, we have the numbers from the core sequence, and the golden ratio 1.618, which also happens to occur in nature and the cosmos. How to find new numbers in the core Fibonacci sequence? To find a new number in the Fibonacci sequence, we simply add the previous two numbers, and the result is the next Fibonacci number in the sequence. For example, 1 plus 2 equals 3. 2 plus 3 equals 5. 34 plus 55 equals 89. You can repeat this process indefinitely. What are the Fibonacci ratios? These are the most important Fibonacci ratios, and most widely used in trading. How to find the Fibonacci ratios using the sequence? To find a Fibonacci ratio, you have to simply divide a number in the Fibonacci sequence by the first, second, and third numbers in front of it. For example, 13 divided by 21 equals 0.618, and 13 divided by 34 equals 0.382. And 13 divided by 55 equals 0.236. To find 0.5, we divide 1 by 2, which equals 0.5. The most important ratio is the 0.618, which is known as the golden ratio. As we described, the golden ratio appears naturally in shapes throughout nature, along with the core Fibonacci sequence. It's known as the golden ratio because many numbers in the Fibonacci sequence, when divided by the number in front of it, equals to a factor of 0.618. This works best with larger numbers in the sequence. For example, 55 divided by 89 equals 0.618. And this goes on indefinitely. Why is Fibonacci important to the field of cryptocurrency? If the Fibonacci sequence, specifically the golden ratio 1.618, appears in nature, could the application of a series of Fibonacci ratios reveal a connection and allow us to predict how price moves? Price movements of any asset is simply the result of traders buying and selling assets, which is caused by the human emotions, fear, and greed. As a result, the price of an asset never moves in a straight line. Instead, it always zigzags in the direction of the overall trend. As price moves up or price moves down, for an extended period of time, one might be able to use Fibonacci ratios to predict where the price of an asset might be headed to, before continuing its journey either up or down. It's because of this mathematical occurrence in nature that many traders believe these ratios could hold significance when trading. So, Fibonacci is potentially useful to anyone who is trading cryptocurrency. But Fibonacci also applies to any trading market, for instance, stock market trading. How does one use Fibonacci ratios in trading? Here is a Fibonacci retracement tool. To the right of the tool, we can see the Fibonacci levels discussed. There are many more levels that will appear on a tool, but for the purposes of this video, we are only using those discussed. Note that these Fibonacci levels can also be seen as percentages by selecting this option from the settings menu of the tool in Trading View. To use the Fibonacci tool, you simply open Trading View, open the chart of an asset you want to apply Fibonacci to. Select the Fibonacci retracement tool. Find a place on the chart where you can see that either a bullish or a bearish trend has occurred. Using the Fibonacci tool, plot from the major swing low to the major swing high when the trend is bullish. And when the trend is bearish, you plot from the major swing high to the major swing low. A rule of thumb when using the Fibonacci retracement tool is said to be, an asset needs to have retraced around 23% in order to be able to identify a true swing high. And vice versa, an asset needs to have retraced 23% in order to identify a true swing low. If this doesn't occur, then it is unlikely that traders would take a trade. The common retrace zone is between 0.382 and 0.618, known as the golden zone. It is important to note that price can still continue in either direction, reaching more significant Fibonacci retracement levels. Here are some examples, with the Fibonacci tool applied, taken from past price action on Bitcoin. As you can see here, we identified the major swing high after the price retraced to the 0.236 Fibonacci ratio, or 23.6% level, so we anchored from the major swing low to the major swing high. The price then fell further, nearly hitting the 0.618 Fibonacci golden ratio, upon which the price continued rising, in line with the overall bullish trend. Here, we identified the swing low, because the price retraced to the 0.236 Fibonacci ratio, or 23.6% level, in a strong impulse move upwards, and broke through 23.6%, so we anchored from the major swing high to the major swing low. Breaking through 23.6% led to the price rallying until it hit the 0.618 golden ratio, before continuing downwards, in line with the overall trend. In today's video, we have discussed what Fibonacci is, why it's used, and we also introduced you to the basics of how to use the Fibonacci tool, providing some rules and methodology. The best thing to do now is practice using the Fibonacci tool, keeping in mind what you have learned here. So why not load up some charts, and try to identify bullish and bearish trends from the past, on different assets. Try to find the swing high and swing low points, in both bullish and bearish trends, and examine the retracement levels, against the Fibonacci ratios discussed. Then ask some questions. Did they hit the levels you were expecting? What would you do in a similar scenario? Remember, the Fibonacci tool is just a tool, and is best used in combination with a variety of other trading tools. In addition, the Fibonacci tool is not guaranteed to produce the results you expect. But it is interesting to examine what has happened in the past, to see how price action has reacted to these Fibonacci ratios. Does this connection between Fibonacci, nature and the cosmos, truly transcend to the world of trading, or not? Well, that's for you to decide. That's all from Crypto Pulp University. If you like the content of this video, remember to give us a thumbs up, and tick the bell for notifications. Thank you for watching.